And we've talked about Fed Chair Jerome Powell's address from an economic perspective. We also want to talk about it from a market perspective. And for that, we have Erik Knutzen, multi-asset class chief investment officer at Neuberger Berman. And Erik, it's great to have you with us this afternoon. We take a look at the reaction that we're seeing in the markets today. The Dow now off over 500 points. What do you think investors are most concerned about today on the heels of those comments from Jerome Powell?
I think that investors are beginning to evaluate kind of the shift of what they're underwriting in markets. We've seen this very significant rebound in primarily U.S. large company stocks and investment grade bonds off the bottoms in March. And that was really based on the tracking of the virus and expectation of the virus peaking in April in Europe and in late April or even May in the United States, and the massive stimulus that was, accompanying the crisis. At some point, our expectation is that investors would have to pivot and start evaluating or underwriting the impact on the real economy. And now we're starting to see that. And what Powell's comments indicated is that there are, to a certain extent, limits to what the Fed can do. And they've done a lot. I agree completely with Professor Economides in terms of the positive impact of what they've done. But at some point, either fiscal stimulus has to pick up the baton and extend the relief and support for people impacted by the virus beyond a month or two, or there is going to be more lasting pain in economic fundamentals.
Yeah, Erik, what do you think will be the next catalyst for the markets? Will it be some sort of fiscal policy? Is that what you think will be needed in order for the market to continue some of its momentum that we saw during the month of April?
I think the market is looking at the impact of reopening extraordinarily carefully. I agree with Professor Economides. The most important economic driver over the short term is going to be the degree to which the economy reopens. And the economy is reopening. It's happening. It's happening state by state, not in a coordinated fashion as you see in Europe or other countries, but state by state. What happens in terms of the levels of cases in Georgia, in Florida, in South Carolina, in Tennessee, in Texas, in other states as they begin to open up? If they stay flat or even decline as economic activity begins to resume, then markets can take heart. If, as the economies reopen, you start seeing spiking activities in terms of cases, hospitalizations, there's going to be risks of lockdowns and a much slower recovery.
And Erik, at a time like this, when there's so much uncertainty, like you're saying, we're trying to gauge whether or not we've seen a peak, what the next couple of months will hold. How has this shifted your investment strategy, and how are you identifying opportunities at this point?
Sure. So we work closely with the senior investors across Neuberger Berman and our colleagues to identify what we call a crisis playbook, where we identified 3 scenarios for how we could pass through this crisis. Our base case, a U-shaped recovery, as Professor Economides indicated, a bull case, which was V-shaped, and a bear case, which was more L-shaped. We believe that a month and a half post kind of the nadir of the markets in March, the economic information, corporate earnings, unemployment is consistent with the base case view, 25 to 30% drop in economic activity, peak to trough in the U.S., 6% GDP, negative GDP growth for 2020 is a more modest recovery of economic growth in the second half of the year. In that base case environment, we want to be oriented towards large cap, high quality companies with the U.S. orientation and investment grade credit and higher quality, high yield bonds, really going where the Fed's going. And that's our kind of all weather exposure. And then the other thing we're doing is we're trying to take advantage of volatility. We think that we will see the kind of volatility we saw late yesterday and today for some time to come. And so one way we're gaining equity exposure is through writing put options on the US, on the S&P 500. To basically get paid a very rich insurance premium on the willingness to buy equities at lower levels from here. It's a way to get paid in a high volatility environment without taking as much downside risk.
And Eric, real quick, I just want to get your take on just what we saw on the earnings front over the last several weeks. We're getting ready to wrap up earnings season. We've seen a number of companies withdraw their guidance, so not really giving us a great picture of what's expected ahead. But how are you incorporating that into some of your forecasts?
Yeah, our assessment is that we're going to see a 25 to 35% drop in S&P earnings in 2020 relative to 2019. That brings us to about $110 a share, down from 163, and then next year rebounding to 140, 145. When you look at Wall Street consensus, it's come down to the low 120s, but it's dropping fast, and so we think it's going to converge to those levels. But we do see evidence that it's troughing, as many upgrades as downgrades of forecasts, more upgrades for cyclicals, fewer upgrades for defensives. So we think that Wall Street is kind of catching up to the magnitude of the shock that we're experiencing on the corporate sector. All that said, at those levels of earnings, it's hard to make the case that the S&P 500 is anything other than fairly richly valued at these levels. We'd like to see some short-term pullback or more evidence of clarity on the pace of the rebound as the economy opens up before we add significant equity risk at this point.
Erik Knutzen of Neuberger Berman, thanks so much for taking the time.
Pleasure. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.